Welcome to the deep dive. This is where we cut through the noise of earnings calls.
Yeah, get right to the heart of it.
Exactly. We distill the most important nuggets for you. Today, we're looking closely at GSI Technologies' Q1 fiscal year 2026 earnings. We'll be dissecting the numbers, management strategy insights, and, crucially, what the market thought.
Always the interesting part, the market reaction.
Right. Our mission, as always, is to get you well-informed quickly and thoroughly. And this call, it was July 31st, 2025. It really showed this fascinating dichotomy. You had these operational wins.
Of investor skepticism, yeah.
And the market reacted pretty sharply. So let's unpack this, starting with the headline figures. Because on paper, some definite bright spots.
Absolutely.
GSI reported net revenue of $6.3 million. That's a robust 35% increase year over year.
Right.
And a solid 7% sequential bump from the prior quarter. That's a pretty good start, wouldn't you say?
It absolutely is. Yeah. And, what's particularly interesting, alongside that top-line growth, their gross margin jumped significantly to 58.1%. Now, that's an impressive 1,100 basis point expansion compared to the prior year. Huge jump.
Wow. Okay. Why such a big leap?
Well, they attributed it mainly to a better product mix and also the benefits of scale.
Right, getting more efficient.
Exactly. They're getting more bang for their buck as revenues grow, spreading those fixed costs. For an investor, seeing that kind of margin expansion is usually a big green flag.
Okay, and this is where the plot thickens a bit. Because despite those strong revenue and margin gains, they were still GAAP loss-making.
Still in the red.
Yeah. For anyone maybe not super familiar, GAAP is just the standard accounting rules. And under those rules, GSI reported a net loss of $2.2 million.
Right.
Which translates to a GAAP EPS, earnings per share, of negative 0.08 cents per share.
And that's a stark contrast to the prior year where they actually had positive EPS, 0.08 sore fins.
So quite the swing. We've got growth, we've got better margins, but the bottom line is still, negative.
Exactly. And just to round out the financial picture, they ended the quarter with $22.7 million in cash and equivalents.
Okay, decent cushion.
Yeah, but it was bolstered by an $11 million equity financing, an at-the-market offering, an ATM.
Ah, so selling shares into the market.
Precisely. It gives them flexibility to raise cash over time, but it also signals, that they need capital.
Which brings us to the market reaction. Because it was quite telling, wasn't it? Really highlights that dichotomy we mentioned.
That's right.
There was this little initial bump aftermarket, like 2.5%.
Yeah, small pop.
But then the following day, a pretty notable sell-off, down almost 14%.
Ouch. Yeah.
It really suggests investors were, looking past the operational improvements, maybe focusing on that GAAP loss and the need for cash.
It seems like it. Pretty typical for microcaps sometimes, but still, a sharp reaction. They wanted more.
Okay, so with that financial snapshot, what does this all mean for GSI's strategy? Management talks about this two-track strategy.
Right.
Defending their traditional SRAM business, that's the static random access memory.
Kind of the bread and butter, provides the baseline revenue.
Right. And at the same time, pushing hard on their new stuff, the associative processing roadmap, specifically that Gemini-II chip.
Yeah, aiming that at high-growth areas like edge AI and defense-adjacent workloads.
It's a classic balancing act, isn't it? Trying to keep the old engine running while building a completely new one.
It truly is. And the challenge isn't just executing both. It's communicating the value of that, speculative Gemini-II part without scaring people off about the stable SRAM business. Investors often struggle with these hybrid models.
Makes sense. So digging into the SRAM side first, you said it showed continued strength.
It did, yeah. Third consecutive quarter of rising sales, actually, driven by, the broader AI adoption, hyperscalers needing more high-performance memory.
Like the big cloud guys.
Yeah, exactly. Amazon, Microsoft, Google, their data centers are hungry for this stuff. And sales to Cadence Design Systems were particularly strong.
Ah, Cadence, the chip design tools company. They use SRAM for emulation.
That's right, for AI chip emulation systems. Sales to them were $1.5 million this quarter. Nearly 24% of net revenues. That's up from 0 last year.
Wow, okay. That's pretty strong validation for the core memory products.
Definitely.
But even with that strength, SRAM isn't without challenges, right? We heard about supply chain constraints.
Yeah, this is a critical point. Big headache for them.
What's going on there exactly?
It's largely due to tariffs, which are forcing assembly operations to shift out of China.
To Taiwan.
To Taiwan, yeah. And this isn't just like a minor logistical thing. It reflects that broader geopolitical risk hitting even small companies like GSI now.
And that shift impacts capacity.
Severely. It's impacted manufacturing capacity and dramatically extended their lead times. Almost overnight, they said.
Okay. And that hit sales.
Directly. It affected their Q2 forecast because a portion of their backlog just couldn't be shipped in time. For instance, sales to one significant customer, KYC.
KYC, right.
They were notably weaker this quarter, down to just $267,000. Partly inventory adjustments, but also these lead time issues.
So what's the outlook for SRAM then?
Management expects SRAM revenue to be pretty stable for the rest of fiscal 26 while they, navigate this mess. It really highlights how vulnerable these specialized chip makers are to global supply chain shifts.
Okay. So SRAM is the anchor, dealing with some choppy waters.
Yeah.
Let's shift to GSI's future bet. The innovative side, Gemini-II. Big milestone there.
That's right. Huge news for them. The second silicon of Gemini-II has been evaluated.
Second try, basically.
Yeah, second revision. And the good news is it's now fully functional and production ready. All known bugs resolved.
Okay, production ready. That sounds important.
It is. For those maybe not familiar, Gemini-II isn't your standard CPU or GPU. It's an associative processor.
Right, different architecture.
Think of it like, well, it's designed for highly parallel searches based on content, not address. Makes it incredibly efficient for pattern matching tasks.
So this is a crucial step towards actually selling this thing. Getting it production ready is a big validation.
Massive validation for their APU, yeah.
And they're not just sitting on it, right? They're actively targeting opportunities. Where's the traction?
Absolutely. Gemini-II is designed for these demanding, low-power, high-throughput pattern matching needs.
Like what?
Think drones operating where GPS doesn't work. GPS-denied environments.
Okay, military or industrial applications.
Exactly. Or next-generation satellites that need sophisticated processing right on board. They mentioned a low-power version of Gemini-II on their LEDA-II development board.
LEDA-II, right.
That's already shipped to a key offshore defense contractor for proof-of-concept work.
Offshore defense contractor. Interesting.
Yeah, they've apparently been working with this contractor for over a year, so it positions them well if the concept proves out. This is the kind of niche, high-value area where their specialized tech could really make a difference.
Okay, defense makes sense. But beyond that, they're also making a play for, well, a very hot area right now, LLMs.
Indeed. Large language models, but specifically at the edge.
Running AI models on the device itself, not in the cloud.
Exactly. And Gemini-II's architecture seems really well suited for that. Its internal SRAM provides this efficient, high-speed memory path that's crucial for LLMs, especially when you care about low power. Every watt counts at the edge.
And it handles data differently, too.
Yeah, it's flexible. It can act as a bit processor, handling data from 1-bit up to 32-bit operations. That means it can work with data in really small, efficient chunks.
Which is good for saving power and memory on smaller devices.
Precisely. Enhances its capability for these resource-constrained edge LLM tasks. They're actually developing their own multimodal LLM for edge use cases.
Okay, so they're building the software tools, too.
Yeah, they expect benchmark results next quarter. And they're improving their AI compiler and software libraries to make it easier for developers to actually use Gemini-II. Being able to run complex LLMs locally, that's a potential game changer for a lot of industries.
Definitely. Okay, so looking ahead then, GSI's outlook for Q2 fiscal 26, what are they projecting?
Net revenues between $5.9 million and $6.7 million.
Okay, so potentially flat to slightly down or slightly up compared to Q1 $6.3 million.
Exactly. And gross margin expected between 56% and 58%.
Yeah.
So holding pretty steady there.
Right. Which, implies stable demand, but maybe not that significant acceleration investors were hoping for, especially given that market reaction we talked about.
Seems that way. And management themselves emphasize the company is at a pivotal point.
Pivotal point, meaning?
Meaning they're actively looking at strategic options to get the capital they need to scale efficiently, to advance the APU products.
So potentially using more of that ATM facility, selling more stock.
That's definitely on the table. They mentioned potentially drawing on the remaining balance during upcoming trading windows. It just underscores how capital intensive it is to scale up a new chip architecture right now.
Okay. So for investors listening, what are the key catalysts? What should we be watching over the next, say, 3 to 6 months that could really move the needle for GSI?
Well, several critical signs, I think. First, obviously customer qualification updates. And even better, initial purchase orders for Gemini-II. Real sales.
Proof points.
Exactly. Second, Any specific defense or industrial wins tied to that low-power AI inference capability. A named contract would be huge.
Right.
Third, the next earnings print, Q2 FY26. That'll give the next update on financials. And finally, just keep an eye on the broader semiconductor market. The SOXX ETF is a good proxy, especially how microcap AI hardware names are trading.
Yeah, the overall sector sentiment matters too. These are all crucial for proving they can get sustained top-line acceleration and, justify investor confidence. This whole picture, it also raises questions about their go-to-market, doesn't it? How they actually sell this stuff. I remember during the Q&A, an investor, Anna Chapman,
Right, yeah.
she asked directly about how they incentivize their sales force. Kind of suggesting sales should be higher given the tech quality. It's a fair point, right? If the tech is solid, why aren't the numbers bigger yet?
It is a fair point, and it really gets to that core challenge.
Yeah.
Translating technical wins into commercial success. Management's explanation was their independent sales reps get paid commission on shipments.
Okay.
And GSI products are positioned as door openers with no competing lines for those reps. Distributors get paid on margin, usually above the company average.
So it raises a question for you, the listener, I guess. Is that structure really effective? Is it converting that Gemini-II 7 now that it's production ready, into the sales pipeline and volume needed?
Yeah, is it optimized for selling a complex niche new technology, or is it maybe better suited for their established SRAM business? It's something to consider.
So summing up then, GSI delivered a quarter with some clear operational wins. Strong revenue growth at big gross margin expansion.
And that crucial technical milestone, Gemini-II is production ready.
Yet, the market's reaction was negative. That sell-off really underscores the challenge they face, translating technical validation and efficiency into profit and, importantly, volume orders.
Yeah, that path from being a niche memory supplier to becoming a differentiated AI accelerator player, it's clearly still being paved.
Yeah.
And it's a demanding road for investors to watch.
So this deep dive, it really reveals a company at a strategic crossroads, promising tech, definitely, but also significant hurdles in a tough market.
Capital intensive, competitive.
Exactly. All right, you know what time it is. This is the part where we let our imaginations run a bit wild.
The what-if zone.
Strictly for thought experiment purposes, of course. No financial advice here, just scenarios like, maybe a hedge fund analyst might pitch to their committee.
Okay, let's brainstorm. So, connecting this to the bigger picture. The market's punishing the lack of profit right now and that kind of flat Q2 guide.
Right.
But the underlying tech for edge LLMs, for critical defense apps, that seems definitively there. That Gemini-II validation is real progress.
Okay, so considering GSI is a microcap volatile, but they have this strong tech validation for Gemini-II in these niche, potentially high-value areas. And the market reaction arguably didn't fully credit the operational gains.
Right.
Here's a highly speculative thought experiment, focusing on the company's potential upside, not just a quick stock trade. Imagine the ultimate scenario if these catalysts actually hit.
Like a major defense win.
Yeah.
Or significant adoption for edge AI.
Exactly. What does that mean for GSI as a company beyond just a short-term stock bump? We could be talking about them becoming a critical component supplier for next-gen defense systems, or maybe for decentralized AI infrastructure.
A key piece of the puzzle in those high-growth areas.
Right. So if any of those initial defense or big edge AI wins do materialize and start turning into real volume orders for Gemini-II, even a small shift in perception could trigger a substantial re-rating of the company's long-term value. This thought experiment looks past the short-term noise, leans into the tech progress, and really bets purely on that game-changer narrative for Gemini-II. Assuming, big assumption, management executes and lands those critical wins, it asks you to think about what the company could become.
A pure play on Gemini-II, succeeding in those key markets. High risk, potentially high reward for the company itself.
Exactly. Purely a thought experiment. As always, your insights make these conversations richer. What stood out to you from this GSI deep dive? What's your take on their pivot?
We definitely encourage you to keep scrutinizing the details, dig in, and form your own conclusions.
Thanks for joining us on the deep dive. We'll be back soon with another look into the markets.